Hello accounts people, time to have a look at payroll and in particular focusing on the use of a wages control account. I've got some very simple numbers here, but all the main categories so that we can focus on what entries go into the journals, what entries go into the T accounts without having to worry about too many calculations. So what we've got first then, we have a gross pay. This is the amount our employees have earned. It's either part of their salary or it's the number of hours they've worked times their hourly rate. Either way, we owe that money to our employees. Then we have our first deduction. We have to pay it by law. It's a statutory deduction. We have to take it out of their wages and pay it over to the government. Likewise, we have to deduct employees' national insurance, but the employers is an additional cost. It's not deducted, it's jobs tax, it's an additional cost of employing somebody. In theory, the two lots of national insurance contributions go towards the National Health Service and the government pension, although they do go off in the same cheque or the same direct debit or debit card payment to the same account for them to work it out later. The employee's pension, you should have a pension scheme now, even the smallest business should, and unless you've opted out, some money is taken out your wages to be paid over into a pension fund when the business gets round to it and then earn you money so that you can survive without the government pension. And if you've got a really good boss, the employers will also, as an additional cost to the business, will contribute a little bit into your pension fund as well. Trade union, not very common these days, but it just represents really any other deduction. There are lots of other deductions that can be taken out of people's wages by the employer, and then they sit there and they pay them over to somebody at a later date. So in order, these are the natural order of tasks. You don't necessarily get them in this order in the exam, but the workings out. So the actual cost to the business will be the 100, the gross, what we tell our employees we're going to pay them, plus our two additional costs, our jobs tax, our employers' national insurance, and our contributions, because we're good, into their pension fund. That then adds up to 110, as you would expect. A debit and a credit. Which way round? Well, we owe our employees this, they've done some work for us, and debit, expense. Expenses are debits. Then we need to pay them. So natural next step to actually pay them. What they actually get paid into their bank account will start off with their gross, but we have to take out some tax, and we have to take out our employees, or their employees, contribution, not the employers, and then we have to take out the pension fund money. And on this one, we've also not got to forget the trade union membership. So the actual amount, that works out at 69, and if you can't remember which way around it is, credit the bank, we're paying out of the bank. That means we will debit the wages control account. That's that one going in. Just money coming out of the bank or the cash book. Then, because we paid them, we now owe some tax. We've taken it out of their wages, we owe it to the government, and our own contributions become active on the date that we actually pay them. So how much have we got to pay over to HMRC? Well, if it's not split, if it's one just account, it's going to be one payment, one cheque. 20 income tax and the two lots of national insurance contributions go over to the government. That adds up to 35. And we owe money, it's a liability account to HMRC. So we're actually starting to see a little bit of a pattern here. Debit the wages control. And show the fact that we owe HMRC some money. It will be at least a week before we actually pay that over to the government. Even if you paid on a weekly basis, Payment dates to HMRC usually between the 7th and the 18th or 19th sometimes of a month, sometimes paid monthly, sometimes paid quarterly. So it could be a couple of months before you get round to paying that over to HMRC. Then we need to work out to the pension provider. They'll get paid even less frequently sometimes. So the workings out, well, nice and easy this one. Just the employees and the employers. Same pattern. We owe the money to the pension provider and we're going to debit the control account. And again, it sits in, it's a liability at any particular time. We will owe money to our pension providers, we'll always owe money to HMRC whenever we close our books. So these amounts will be carried down and brought down. Wage expense that goes into the profit and loss account. We've got one little item next, shouldn't take too much workings out because it's only the number one. There's no employers' contributions. Not many employers will help towards your trade union membership. So we owe the money to the trade union, it's been deducted, sits in the business's bank account until we get round to paying it. And now we have allocated all our liability for that time period for our wages, and that has balanced off. By the time we've done that, of course, some more wages. Next week we owe some more money, and then it just carries on. We've brought down balances and carried down balances. Quick little notes then. Okay, items are either added to the gross or deducted. There are lots of other deductions possible. Deductions for child maintenance, charitable giving, other forms of money and debt payments and court deductions, you name it. There are thousands of deductions that can be taken out of your wages before you actually see them. National insurance is due the date when you're actually paid. Sits in the liability until we pay them. I've already mentioned might be monthly or quarterly. Pension amounts are owed to the pension provider till they're actually paid. I have seen them as a year, but that was in the past. I think these days pension providers get paid a little bit more quickly. Again, they're deducted before income tax is calculated because it has special arrangements. A lot of pension contributions are tax-free. Other deductions similarly treated. We saw the trade union one. So at the end of the year, we've all just seen on the spreadsheet, there's lots of liabilities, the balances that are carried down and brought down as credit entries. Wages are always paid in arrears. It's not possible to have paid HMRC up to date. If we close our books on the 31st of March, we can't pay HMRC until the 7th of April. It would really confuse the system, and it just won't accept the payments. And the expense goes into the profit and loss, everything else is carried down and brought down.